More than 82% of retail traders lose, not because the market moves against them, but because they move against themselves. It's uncomfortable to admit, but most losses don't come from bad analysis. They come from moments where emotion responds faster than logic. 1 second of hesitation, one flash of fear, one unplanned reaction. And suddenly the trade is no longer about the setup. It's about your survival instinct. The shift is so fast that most traders don't even notice it happening. There's a hidden mechanism inside the mind that decides whether someone panics at the first red candle or remains calm enough to predict losses before they form. It's the defining split between the reactive mindset and the strategic mindset. And almost everyone starts on the reactive side without knowing it. You can have the skill. You can have the plan. But if your mind fires before your method, the outcome becomes painful, predictable, and repeated. This is where almost every trader begins, and almost every trader stays. Let me show you what it looks like in reality. Arslan was the type of trader who knew the basics well. Structure, risk, momentum shifts. Nothing complicated for him. He wasn't reckless, he didn't over-leverage, and he wasn't trying to get rich overnight. He just wanted steady progress. The problem wasn't his technicals, it was his timing. Every time the market moved faster than he expected, something inside him flipped. His heart rate changed, his breathing tightened. His cursor hovered over the close button even when his trade was still valid. He reacted before thinking. One morning, he planned a clean sell on a major level. The market tapped into his zone, rejected beautifully, and he entered exactly where he was supposed to. For the first minute, everything was calm. Then a single bullish candle formed. Nothing massive, nothing threatening, just a normal correction. But his brain didn't read it as normal. It read it as danger. He zoomed into the lower time frames, changed his chart layout, stared at every tick, and as price pushed slightly upward, he felt the old pressure crawl up his back. He closed early, too early. He didn't wait. He didn't breathe. He didn't evaluate. He reacted. The market immediately reversed back into his direction and melted for the next hour, hitting his original target almost perfectly. He watched the entire move play out without him. He felt the frustration rise, not because he lost money, but because he lost control. And then he made the second reaction, the one every trader knows too well. He jumped back in. Same direction, worse entry, bigger stop, more pressure. Now every pip mattered. Every fluctuation felt dangerous. Every candle felt like evidence that he was wrong. So when the market made another normal pullback, a healthy one, he panicked again, closed again, and watched it continue without him. Again, he kept telling himself he needed a better strategy. But the truth was clearer than the chart in front of him. He wasn't reacting to price. He was reacting to the feeling of losing control. His reactive mindset wrote the story long before the candles printed it. And here's the part that really broke him. This didn't happen once. It was his pattern, his loop, his cycle. Different days, different pairs, same reaction. Now let me tell you about someone on the opposite side of the spectrum. Aisha wasn't impulsive. She didn't panic click. She didn't revenge trade. But she had a different kind of reactive mindset, the kind that freezes. Her reactions didn't spill outward. They locked inward. She studied everything. She journaled. She watched hours of price action breakdowns. She knew exactly what a clean setup looked like. But every time a real setup formed in front of her, she hesitated. Not because she didn't understand it, but because a small doubt whispered inside her mind. What if this is the one that fails? That whisper was enough to stop her hand from clicking. She watched opportunity after opportunity appear and disappear, not because the market was tricky, but because she kept running scenarios in her mind. What if the level breaks? What if the candle fakes out? What if this is the trade that erases the last win? She didn't know it, but she wasn't analyzing the chart. She was analyzing her fear. One afternoon, she spotted a textbook buy setup. Clean trend, strong structure, decisive breakout, beautiful retest. She marked everything perfectly. She knew the risk. She knew the target. She felt confidence for a brief moment. Then the reactive mindset whispered again. She waited for more confirmation, then more, then more. By the time she finally convinced herself, price had already moved halfway to her target. She entered late, pressured, unsure, and now the pullback terrified her because her stop was too tight. The next candle dipped a little, still perfectly healthy, but she closed early. She couldn't handle the tension. She exited not because the setup was wrong, but because her mind was overwhelmed. The market hit her original target a few minutes later. Full move, clean expansion, and she was out with a tiny scratch, feeling defeated. She didn't lose because she was shy or inexperienced. She lost because hesitation is just another form of reactivity, a gentler one, but just as destructive. She wasn't chasing trades, she was running from them. But both patterns come from the same place, a reactive system that activates before a strategic one can take over. The market didn't break her plan, her mind did. And the tragedy is, she didn't even realize it. She thought she needed more confidence, more confirmation, more rules. But none of those were the real issue. She wasn't lacking clarity. She was lacking trust in her execution timing. And every delayed click reinforced that doubt. Both traders were stuck in opposite behaviors, but the root was identical. Arslan reacted too fast. Aisha reacted too slow. One entered too quickly. One entered too late. One closed early out of panic. The other closed early out of pressure. And both kept repeating their pattern because reactive trading feels real in the moment. It feels justified. It feels logical. Only later do you see it for what it truly is. A mind predicting danger that isn't there. This is the silent trap that keeps most traders stuck for years. The reactive mindset is not a decision. It's a trigger. And the trigger fires long before logic wakes up. It's biological. It's emotional. It's built into your survival system. And the market is the perfect environment to activate it, nonstop. Every candle shift, every sudden wick, every unexpected pullback stimulates the part of your brain that cares more about avoiding loss than executing the plan. That's why backtesting feels easy and live trading feels chaotic. Backtesting removes threat. Live markets magnify it. And the reactive mindset responds to threat faster than intention. Here's the part no trader understands. You aren't reacting to the chart. You're reacting to the future your mind imagines in the next few seconds. The fear of damage. The fear of missing. The fear of repeating old mistakes. This internal forecast triggers your response before the actual candle completes. The chart moves slowly. Your mind reacts instantly. And this is why most people stay stuck in the same behaviors no matter how much they learn. Knowledge doesn't stop reaction. Skill doesn't stop reaction. Only awareness of the pattern stops reaction. And most traders never look inward long enough to see it. The difference between a reactive and strategic trader is not intelligence. It's sequence. It's who moves first, your emotion or your plan. And until that sequence shifts, the outcome never does. But something interesting happens when you finally understand the timing of your reactions. When you recognize the subtle internal cues before the behavior follows. When you sense the trigger before the trade. The entire decision-making process begins to change. It becomes quieter, clearer, more predictable. And that's where things start to shift. But that shift isn't obvious at first. It doesn't start with discipline or motivation. It starts with one realization that cracks everything open. And once you see it, you'll never be able to trade the old way again. That moment changes everything. And it's closer than you think. When most traders finally recognize their reactive patterns, they assume the next step is to fix their emotions. They try breathing exercises, motivational lines, risk rules, tighter stops, looser stops, cleaner confirmations. But nothing fundamentally changes. And the reason is simple. They're trying to repair a system that's still blind to its own triggers. You can't fix what you can't see. You can only manage it until you finally uncover the mechanism beneath it. That mechanism becomes impossible to ignore the moment you compare how humans interpret risk with how AI interprets it. And this is where the entire game flips. AI doesn't predict the market with magic. It predicts the behavior that humans repeat. It doesn't care about fear. It doesn't care about hesitation. It doesn't care about the illusion of danger that traders feel when a candle pulls back slightly. It only measures sequences, reactions, timing, consistency, and patterns of behavior that repeat so often they become statistically predictable. Humans panic when price pulls back. AI sees it as a normal percentage fluctuation. Humans hesitate when a perfect setup forms. AI reads it as an alignment of variables. Humans close early when fear spikes. AI holds because the structure hasn't broken. This is the contrast that hurts the ego, but heals the performance. And here's the part no trader expects. AI reveals that most losses happen 12 to 18 seconds before the candle that causes them. Not on the chart, but inside the trader's mind. A small emotional jolt, a subtle shift in breathing, a flash of worry, a moment of pressure. The internal reaction always comes before the external decision. But because traders can't see their own mental timing, they believe the market is the problem. AI shows otherwise. AI exposes the behavior, not the candle. And this is where everything flips. Because once you understand that your losses come from timing, not from analysis, the entire strategy becomes simpler. The market becomes quieter. Your reactions lose power. You stop trying to fight fear and start learning how to see it before it takes control. This is where the strategic mindset starts forming. Not through confidence, through clarity. And the shift begins with extremely small, extremely simple micro steps that remove the mind's ability to react before the plan can function. The first shift is awareness. Not emotional awareness, behavioral awareness. The moment before the reaction. The second your hand moves toward the close button, even though the setup is still valid. The second your mind starts searching for more confirmation, even though the structure is already clear. That half-second pause between the urge and the action is where the entire psychological transformation begins. The second shift is preparation. Strategic traders don't wait for emotions to appear. They prepare for the exact moments where they normally lose control. They expect the pullback. They expect the sudden wick. They expect the faked break. And because they expect it, the reaction never catches them off guard. The third shift is sequence. They decide their steps before price moves. Entry criteria, exit criteria, invalidations. They don't improvise under pressure. They follow pre-written decisions. The mind becomes a performer, not a writer. And the fourth shift, the one that transforms everything, is timing control. Not controlling the market's timing, controlling your timing. The microsecond gap between feeling the urge and executing the plan. The tiny pause that interrupts reactive behavior and allows strategic behavior to activate. Let's turn these shifts into something you can use immediately. They're simple by design, because simplicity is the only way to break reactive loops. The first micro-action is this. Whenever you feel tension spike, do nothing for one full breath, not to calm your emotions, but to stop the reaction from firing instantly. That breath gives your plan time to catch up. You're not breathing to relax, you're breathing to delay the urge. That half second is enough for logic to return. The second micro-action is pre-labeling your setups. Before the session starts, define exactly what qualifies as an entry. Not loosely, not vaguely, but clearly. Because the reactive mind loves uncertainty. It needs gray areas to take control. When the setup is defined earlier, you remove its freedom to manipulate your decisions. The third micro-action is to choose your exit when you enter, not after, not when you're in profit, not when fear kicks in. Before, because once the trade is live, your mind is too biased to decide fairly. Pre-written exits remove emotional involvement. The fourth micro-action is one almost no trader does. Write down the exact moment before you react. Not the reaction itself, the moment before, the breath that shortens, the hand that moves toward the mouse, the zooming into lower time frames, the urge to adjust stops. That pre-reaction signature is your trigger. Once you recognize it, the entire pattern loses power. Most traders journal the trade. Few journal the moment before the mistake, but that is where the mistake is born. Here's your pattern interrupt. A strategic trader isn't calm because they're fearless. They're calm because they control when they respond. A reactive trader responds instantly. A strategic trader responds intentionally. Same chart, same tools, same market, different timing. This is the shift AI makes obvious. AI identifies the pattern. Humans feel the pattern. And the new version of you needs both awareness and action. Now imagine what begins to happen after a few weeks of applying this. Your reactions slow down. Your clarity strengthens. The constant emotional noise fades. You begin to predict losses before they happen. Not through analysis, but through sensing your own behavior. You recognize hesitation before it freezes you. You sense panic before it controls you. You see impulsiveness before you act on it. Your plan starts winning not because it changed, but because you finally stopped interrupting it. And gradually, without forcing discipline or fighting emotions, you start stepping into a different version of yourself. A version that no longer trades like someone trying to survive the next candle. A version that trades like someone expecting the market to test them and prepared for it. A version that responds slowly, clearly, deliberately. A version that moves with intention, not tension. This upgraded trader sees the same chart, but experiences a different world. They understand pullbacks without fear. They understand hesitation without freezing. They understand pressure without panicking. Their entire identity begins to shift from someone who reacts to someone who anticipates. And once this shift happens, your old trading behavior feels foreign, almost unrecognizable. You don't chase, you don't flinch, you don't close early because of imagined danger. You watch, wait, measure, execute. Calm isn't something you force, it becomes something you are. You start trusting yourself. You start trusting your timing. You start trusting your decisions before the market tests them. This is the moment every trader waits for. The moment where your mind finally stops fighting your method. The moment where your decisions stop coming from fear and start coming from clarity. The moment where the market stops feeling like a threat and starts feeling like a system. This is the moment where your evolution becomes inevitable. And if you feel like you're ready to step into that transformation, if you feel the shift beginning, then keep going. You've already started the process. Now continue it. If you're ready to evolve your trading mind, this is your next step.